So let's dive right in. The last few years have been an insane period for the M&A space. Immediately post COVID, it was an extremely hot market from an M&A
Yeah.
perspective. And comparatively speaking, right now, I think most folks would say that it's a slower period. What's your take on the current environment for M&A in that lower to middle market space?
Yeah, I think you hit the nail on the head. I mean, we kind of had an extremely, frothy period kind of coming out of COVID. There was a lot of pent-up capital. There was a lot of money that had to get deployed. You had a lot of sellers who were ready to go, and we just had a great, I would say throughout most of 21 and probably the first half of 22, great market. Deals were getting done fast. People were fighting over deals, and kind of it started to shift. It felt like last year as we started getting some of the rumblings in the debt market, kind of in the middle of the year. Summer there's always a little bit of a drift, as you know. And then it started to slow down after that, and it's kind of continued into 2023. Although, and I'm interested in hearing, we'll kind of talk about it here as well, but it feels like we're starting to see signs of life again, which is good. I try to tell my partners and associates, it can't stay like this forever, right? You can't not, people are going to buy and sell things. The money's got to get deployed eventually, so it's going to turn around. But, we're starting to see things getting better, but I think it is a very challenging market right now still.
Yeah, absolutely. A lot of the folks that we speak with, they'll use a very common phrase of, a lot of deals are hairy at the moment.
A lot of hair growing on them. Yeah, exactly.
Hair growing
Exactly.
on 'em. Yeah.
And I think people were last year, I think they were willing to look past a lot of that hair and figured out, we'll just figure it out. It's okay. And I think today you're seeing a number of things that are kind of coming together, a lot of it being driven by the lenders right now, that it's much harder to get a lender to approve your deal, to, even if they're not borrowing money, just to consent to the deal. If you're over your basket or something like that, and you need to go to the lender, or you want to swing the assets in under your line, they seem to be taking a much harder look at deals, and I think they have less tolerance for things that got hair grown all over them than some buyers might have had in the past. So yeah, it's definitely been interesting from that perspective to find the level of scrutiny that's being put on deals from lenders. When in the past it's never a rubber stamp, but it's been much more, they're willing to kind of go along with the views of the sponsors of the deals.